Hello, my name is Dr. McColbrich, and we will look today together into a new developed strategy called MovingR. If you are not familiar with futures trading, you should read the risk disclaimer on the internet page. We can see here the MovingR strategy in different setups, and we will look together now on all these charts. So on the upper part is just for an example only gold. And from my personal opinion, the strategy behaves best on the gold 120-minute chart. And you can see here a huge number of trades, 1,300 trades. It's a high number. And basically, the strategy had winners most of the time. And when we look into the details, we can see that I included a slippage of $15 per single trade, 30 on a round turn, and commission of $3 per trade, 6 on a round turn. So $36 on a round turn is included, and the intraday 1 minute intraday look inside bar testing is enabled. When we look in further details, we can see that the strategy makes a good average trade net profit. This is very high for gold for 5 years, 336, close to 336. A very good average trade net profit of 256. And I normally look at the RENER index, and the RENER is the select total net divided by the average drawdown multiplied by the percent time in the market. And this gives you a feeling how much money do I get back for the time and for the risk I'm in the market. 408 is a good value for a strategy which is a lot of the time in the market. And the strategy is basically a lot of the time in the market. It's in the market most of the time, but the strategy is normally not reversing the trades. It ends the trades and goes into the new trade. I did this because it's easier or better to trade. Then we can look under the periodical returns. And when we look into the periodical returns, we can see here, for example, on the weekly, and weekly is always a good feeling because normally you will look each Friday into your trades. You can see here, this was a losing week, but in general, the strategy has winning weeks most of the times. And if you trade futures, if you trade gold, you have to be prepared to lose $3,000 or something like this in a week. This is not something which lets you jump out of the window. Okay, then of course it's important if you want to evaluate a strategy that you look into the different trades of the strategy, and we will do exactly this. I trade this strategy since approximately end September, approximately since here, and you could see we had a couple of good winning trades. And what I like on this strategy is that it is very well able to follow the moves of gold. And you can see it here. And so what you can basically say is the strategy makes money if gold makes longer turns, like this turn. And the strategy has issues when gold makes sharp little up and down turns. And we will look through the 5 years, and it's always the same because the strategy, the algorithm of the strategy is quite good in following the gold trades. And if gold moves, the strategy makes money. I just will flip through it here that you can see everything. What you have to keep in mind is that the strategy has only 4 inputs and only 2 lines of code. So it's a very, very short strategy. And the good thing is that 1,400 trades prove that the strategy is doing what it should do. And only 4 inputs make the strategy relatively stable. Here, what you can see here is that the strategy is programmed in easy language. So you can only change the parameters, but I did a second version of the strategy, and I separated the long entry, the short entry, and I added things from the Tradestation menu, which are the given strategies in the Tradestation strategy components. And you can simply add a Tradestation strategy component here, and it will be available, and you can use just the entry and those entries of the strategy. And for example here I put in a trailing stop short, a trailing stop long, and a stop loss, and the result of this is exactly the same as the programmed version in easy language. So this here is the same as this. And the benefit, and yet you can say, oh, I have 2 times the same strategy, but your benefit is that you can use the entry and the exit like here and combine it with other part of Tradestation strategies. For example, a channel trailing stop and a percent trailing, and this is gasoline, and on gasoline it's the same entry and just a channel stop. You can see here the strategy behaves quite good and has an average trade net profit of 279, 283 in 5 years, delivering more than 1,000 trades, which gives you a little bit feeling that is not something done by mistake. And of course here I added also commission slippage and enabled the back testing resolution. Now just some other tricks with the strategy. Here for example I added the strategy in 2 times. 2 times means it's the same as this strategy, but here I put the sell short off and the buy off. And the effect, or the thing what you are doing with it, that you separate the entries and the exits, and of course you separate the stop loss and trailings. So both is totally separated for the long trade and the short trades. And the effect is that you can work a little bit preciser. And what I did here is I made an out of sample tests. And the in-sample data on this is approximately from 2007 to 2012 to here, to beginning 2012, and the rest is out of sample, just to see how the strategy behaves out of sample. And what I did here is that I used a Tradestation session. I used the Tradestation US post stock with post-market session, and you can see the strategy behaves good on a 480-minute chart. In general, we can say the strategy is better or makes more profit if you trade it on 60-minute plus charts. Here, for example, this is out of sample in sample walk forward optimization, and this is a normal optimization. It's also about 10 years, and you can see here a relatively high average trade net profit from $1,000 on each trade. And here, just as an example, I used the strategy on I think S is soya, on soya, and on copper, and on the 10-year note. Makes an average trade net profit from 594. And of course, I also included slippage and commission, and the back testing resolution with look inside bars back testing. And I just added this as an example here, because here again I separated the long and the short entries, and you could also add everything from the Tradestation thing. So I put everything together. I think it's a good strategy. It follows the gold on the 120-minute charts in a perfect way. The algorithm follows gold perfectly. If gold moves, and I think gold will move in the coming months, you make money, or I hope you make money. And with this strategy, you also get a separate entry and exit, which enables you to build other strategies together with the strategy components which are available in Tradestation. I assume that you will be able to make a lot of good strategies with the entry and exit. So altogether, it's a very good pack. I wish you success with trading and a very good trading day. Bye bye.